Let's get on board our two guests for the day. We've got Kunal Bothra as well as Ashish Kapur joining in. But I want to start with Ashish first. Good morning to you both to begin with. But Ashish, how big, according to you, is this development? We are a few months into the process of inoculation, but there is still a large percentage of the population that still has to receive a dose, and particularly when you talk about the 12 to 18 band, that's a very sizable chunk of the population. So is this a huge positive for the company?
Yes, I think so. See, there are the positives of the company can be kind of summed up in this way that the stock anyway corrected. So that's one good point. It has corrected over the last few months. It is anyway, regardless of this development, it was anyway at a level where good buy recommendation was warranted. So, firstly, I'll just tell you briefly about the business of the company minus the new development. The business itself is fairly good. The company is well diversified across different segments, anti-infective, antibacterial, nutraceuticals. They have also launched various products in the injectables and generic business. They have a very strong R&D team, a good product pipeline, and a number of applications lying for approval with the US FDA. So it's a very well diversified across different segments. The results were fairly good. There was 14% last quarter. They saw 14% growth in revenue with 18% growth in EBITDA and a 70 basis points expansion in their margins. This is all that has happened before, and also the stock has corrected around 20-25% from the peak. So anyway, it's a good entry point minus what has happened. Now I'll come to what the new development is good for two reasons. One, like you rightly said, it is going to be administered in the age group 12 to 18, which other vaccines have not got the approval of. And second, it's a new technology which is needle free. So it is a 3-dose needle free technology where the after effects of the injection are less. So it's likely to be more popular than the maybe the existing ones. But even if we take a very conservative, the company is planning to do about 10 crore, manufacture around 10 to 12 crore vaccines in 1 year. But even if we do a very conservative estimate of 5 crore, and we don't know the pricing yet, but even if that is put at a very conservative price of 500, we will get a 2500 crore extra revenue on their 15,000 crore, which means the revenue just by itself by the vaccine launch should grow by at least 15% only on the vaccine on the new vaccine rollout. Plus, like I mentioned, the company itself is doing well. The revenue itself is on the other products also is growing. So I think it's quite a positive thing. The company looks pretty good within the pharma space. Should be one of the better picks now, and we have a target of 705 here, which is again we are valuing it very conservatively. But even 705 is a decent upside from the
Right,
current level. So that's certainly a good level to buy and a good stock to trim in
right.
for buying purpose.
Right. Right. Point taken, Ashish. Kunal, I'll come to you. And how does Cadila look? Remember that after the announcement came that they would be coming out with their vaccine go ahead with for the approval in the month of around May, June. That didn't transpire. We saw the stock correct as well. Right now, that news is actually the overhang is done. They've got the EUA for that vaccine. So how does the charts for Cadila look going ahead?
So, good morning, Cheryl. The stock has already corrected more than 20% from its highs of 670, 673, which I think was hit in the month of April. Now, there are very important chart patterns which are getting formed for Cadila. One of them is the behavior, the stock is exhibiting near to its 200 moving average. If you look at it, in the previous two occasions as well, the stock had gone through a similar kind of a correction, came back to its 200 moving average, and then bounced off and started to start a new trend for itself. This time around as well, it's a third retest of this 200 moving average. So we can expect very similar kind of price behavior for the stock as compared to the previous two occasions. Then the second part is that the stock has come back to an oversold nature in terms of indicators. that's again reinstatement of the fact that probably the stock should be gearing up for a decent short to medium term kind of an uptrend from current levels. And the third and most important portion is that the stock has also completed a 61.8% Fibonacci retracement. This is a very important technical level which we typically watch out for when stocks are going through a correction, because if 61.8% retracement level holds up, then we expect a stronger continuation trend on the prices for stocks. So I think if we go by these three important patterns, and the low which was hit for Cadila last week, which was around this 520, 515 odd mark, should be a very important support for the stock. And if it holds up, you could expect the stock starting to rally and start a very strong uptrend for itself.
Bring on board the first query, and this is someone who had written to us last week. We were unable to take the query, and this one is from Manohar. He's saying that he's bought 145 shares of Union Bank at the price of 39 rupees per share. He wants to know in the long term, looking at the current price point, the stock looks at a very a strong support. He wants to know whether he should average at the price and can he hold on to for the longer term. Ashish, Union Bank, how does this counter look to you? Does it make sense, someone who's already invested in it, continue to hold on for the longer term? Make sense for Manohar to go ahead and average at current price?
Certainly not. I don't think so. My sense is that public sector banks have historically never really made any great long-term wealth. In fact, they have destroyed long-term wealth. I don't think this time is any different. At best, they are good trading picks. And again, trading you can only do if you can really time it right, or if you have the expertise for that. But for any normal investor, I think this is a very bad stock idea. My advice, though you're losing money, do use any kind of upside uptick to get out of this stock and put your money somewhere else. I think there are many other opportunities which are going to come in this bull market. So much better to put your money at work and on a counter which is productive, which will give you some good wealth creating opportunity. But get out of Union Bank as soon as possible.
One is from Madhusudan. He wants to know about Power Grid InvIT. He wants to know whether it's good time to buy this particular counter. He already has about 1,200 shares, which he's purchased at 117 rupees per share. Ashish, you have any view on Power Grid InvIT? If someone is looking at this, does it make sense to buy?
I think Power Grid is a good counter. Power sector itself, I think, is getting re-rated now. And Power Grid, because of its near monopoly kind of a situation, would gain as power consumption keeps going up in this country. So I think Power Grid still remains a very good value pick. Again, a slow-moving counter relatively, and also you need, with any government stock, there is some risk factor of any intervention which may not be best in the interest of the shareholders. But having said that, I think on the whole, it's still a good value proposition. So yes, I would think the investor should continue to hold the counter.
I'm coming back to you on this one, Ashish, and this one is on Rain Industries. We've got Anuradha on YouTube, who's bought at an average price of 165. She's asking whether she can hold on for the long term, whether it's a good company with good prospects. Can she add more at this juncture?
Well, certainly the company has very strong fundamentals. You can continue to hold on. And yes, you can use the dips to buy more also. The market looks like it kind of is entering a corrective phase. So try and stagger your buying and try and get at whatever best average you can. But yes, a good stock to hold on and also to add on declines.
Okay, this one is a WhatsApp query from Sunil from Muscat, Oman, and he's saying that he's purchased 500 shares of GSFC, that is Gujarat State Fertilizers, at 112 rupees per share. He wants to know whether he should go ahead and book loss or average at current prices. He can hold on for the longer term. Kunal, what's your take on this? What should Sunil do?
I think the stock has gone through a correction this month itself. For the previous 4 months, the stock had gone through a decent kind of a rally. This month itself, it's down some 17% or 18% from 127 levels to sub 100, or where the stock is trading right now, 98.99 odd levels. So I would expect that there could be a marginal bounce into the stock price. So if you're looking to exit the stock, I would suggest that wait for levels of at least 105, 107 range. I think that could be a much better level to exit the stock, not at current levels.
All right. The next counter that we're talking about is Birla Corp. If we can pull it up on the screen, we've got Sagar, who's bought at levels of 700 and as many as 1,000 shares. Kunal, he sold 40% of his position at levels of 1,500 and another 30% at levels of 1,380, if I'm not mistaken. He's asking if we should consider full exit at this point.
Not recommend a full exit at current levels. In fact, I would suggest that the stocks which you've sold at the highest levels, 1450 plus odd levels, I think you could look to consider buying them back again, because the stock had confirmed a very strong multi-year breakout when it broke out of the 1,000 plus levels. Sometimes start of or mid of 2020 or the first quarter of 2021. So I think in that sense, it's a stock which has confirmed a long-term breakout. But I think from 1500 levels, it's also gone through a retracement. So purely on that sense, I would suggest that it could be a good level where you could look to consider buying back, whatever stocks you've sold at higher levels.
All right, this query is coming in from Satish. He's saying he's bought Kotak Mahindra Bank, about 55 shares at the price of 1,800 rupees per share. He wants to know what should he do. He has 1 month time frame. He can hold on to this counter. Kunal, 1 month enough for Kotak Mahindra Bank for a viewer to gauge the movement? Satish wants to know what should he do with this counter. He's bought about 55 shares at 1,800.
Not really at all. I think you should definitely look to consider holding the stock for a longer duration of time. Now, there are two reasons for that. If I can enumerate, one of them is purely the fact that the stock is a quality large cap name and it's withstood a lot of the market volatility for many years, and we've seen the kind of price performance the stock has shown. And second, the most important part is that what has happened in the last 5-6 months, that the markets have gotten very polarized. So you have just ICICI Bank and SBI, which has performed very well from the banking pack, and the other names like HDFC and Kotak, etc., they've underperformed. So eventually there would be a catch-up play which could happen where Kotak Bank and HDFC Bank, they could try and outperform the other peers. So on that sense as well, I think Kotak Bank could stand to outperform. Your cost price is also very, very near around the 1,800 mark. And I think if I'm not wrong, stock is at 1,700 odd levels. So I would suggest to hold on and extend your time horizon from just 1 month.
Okay, let's take the next one. In fact, Manohar points out that he's got NMDC at levels of 171. And he's asking what he should do at this juncture. Kunal, I'm going to come back to you on this one. I think that we haven't taken this, if I'm not mistaken. He's got 189 shares at levels of 171. What should he do?
I think at current levels, I would suggest that you can look to stagger your investments in terms of averaging. The stock is entering its oversold natures. We've seen NMDC recovering very sharply from 205 to 150, 149. Where the stock is currently trading. So it's already gone through a 25% correction in the span of the last 2-3 months for itself. And I think the 25 to 30% retracement from its major swing high should be considered as good averaging opportunities. So if you bought at 170 levels, I think at 150 you can look to start averaging and then maybe wait for another 10% drop from current levels. That could be another second averaging point for you.
One is coming in from Kumar Iyer from Mumbai. He's saying he wants to buy AkzoNobel at current market price for the longer term. Does it make sense, Ashish? AkzoNobel makes sense to buy for the longer term at current market price?
Yeah, I think so. I think the company historically has done very well and is now going through a period of consolidation. I think that the stock looks very good at these levels. I think for long-term investor in particular, I think it's a pretty good entry point according to me. So I think one of the better stock ideas. So yes, go ahead and buy.
I'm coming back to you, Ashish, on this one. It's a sectoral question. Danny Verghese points out that you've seen a few pharma and API stocks falling off late. One view would be, yes, okay, they are seeing a bit of a correction. The other view is that they have run up significantly, right? But he's asking, are stocks like Laurus Labs, Vinati Organics, Aarti Drugs, Deepak Nitrate, Alkylamines, those companies, good to buy right now to chip into?
I certainly think, I think most of the names which you have mentioned are all the ones which are the performing ones. And I think both on the specialty chemicals and the pharma side, stock specific approach is what is required. But clearly, if you go with the winners, I think the scope ahead still looks very good because a lot of industry is shifting into India from China, which I think is the play in the chemicals and specialty chemical space. So I think that there is still a long room to go. But yes, you have to go with the winners. And the names which you have mentioned are the winners, which basically are Deepak Nitrite and alkylamines and the rest. And I think within the pharma space, again, Laurus Labs still looks very good. So does Aarti Drugs, and also some other the names which look very good are, I think, going to keep performing going ahead. So generally, specialty chemicals in the pharma space is a good place to be in. But I think that the easy fruit plucking has gone. So now from here on, you have to be very stock specific with your approach.
Okay, this one is from Sagar. He wants a technical view on Century Ply. Kunal, how does the chart look for this counter? He's looking at a medium term.
I would suggest that have a buy on dips approach, because what has happened for Century Ply is from 2020 March lows, the stock which was at 100 rupees, has rallied up to 450. It's not just the price appreciation from 100 to 450. Of course, many of the mid cap stocks have already gone through that, but it was the successive price rally. I think for a straight I think 14 months odd, the stock had shown positive closing. This is the first month where you're seeing the stock going through a corrective phase. Typically, after such a strong streak of a price uptrend, you see at least a 20 to 30% correction, if not more, into the stock prices from the previous major swing highs. So I would suggest that have a buy on dips approach. You can wait for starting points of say 370, 375, and then wait for further corrections on the leg down from those levels. That could be a better strategy rather than buying at current levels.
Okay, another question for you, Kunal. We've got a question on GHCL, and this is from Tarun Gambhir. He says he's bought the counter at levels of 360, and the counter obviously currently just a little bit under pressure, 316 right now. He's asking, should he consider this point to exit or should he average?
Well, I don't think that this is a point where you should exit. What happens is typically when a stock goes through a correction, 20-25%, the first part of the correction is very slow, very steady, very gradual, where investors believe that it's just a consolidation which happens, and the fag end of the correction is where the price starts to drop down significantly. So you see those big bearish candles getting formed, and GHCL is forming exactly those kind of patterns. So the first half, where the stock corrected from 400 to 360, was in a very staggered manner, and from 360 to 320, 318, where the stock is trading, the correction is a bit more intense. These are typically formations where you see the charts going through a bottom formation. So I would suggest that rather than exit, you should wait for further corrections. And if you get a similar price action day, like what you're seeing today, for example, 5% down, if you happen to see that in the next couple of days, that should be a good averaging opportunity for you.
Next query that we're getting is from this one is from Baby John. He's saying, what is the prospect of Aphil India? Ashish, today we had a news flow that came in that Aphil India will be meeting on August 26. The board will be meeting on August 26 to consider a stock split. But apart from that news flow, if somebody wants to look at this particular counter, does it make sense at this current price to look at it and also stay invested for the longer term?
Well, I think I really like this counter, although it is expensive, but it's one of those counters which will remain expensive. And disclosure here, I hold in my portfolio as well. The digital theme is going to, I think, keep playing out going forward. And this is one of those business models which is time tested, which is making money now. And so therefore the valuations will perhaps never really get cheap. And I think over the last few months, the stock has moved sideways, so somewhat you can say it has corrected, and I would think that the news flow will remain positive going forward. So one should use this current price itself as a good entry opportunity. And according to me, I'm quite bullish on this whole space of digital and e-commerce. And I think going forward, this stock should also, the way it has done historically, should generate very smart returns going forward.
All right. Now, this is an interesting question from Rajan Pandey, and I'm sure that a lot of people who have tuned in are also wondering this to a certain extent, Kunal. The question is, are we at the start of a bear market? And while technically we are not, very clearly, is this something that you have to bear in mind? We felt the tremors on account of the taper message that was sent out by the Fed, and that was across the board. And we are at elevated levels as we speak right now. We're seeing a bit of pressure on the broader end of the spectrum. And recent IPOs are not listing with the kind of gains that past IPOs have. What does one have to bear in mind as far as the technicals are concerned?
Very difficult to categorize it whether we are at the start of a bear market, but yes, we are at a point of excess. If I can put it in that way. So whether it's the gush of liquidity, whether it's the gush of very strong rally and the excess of rally which you see into the mid caps and small caps in the last 14-15 months. I think in that sense, there is a point of excess which the markets have been going through in the last couple of months. So this is, I would say, much needed a relief correction for the markets, because when you see a lot of froth building up on the indices, action gets into the small caps and mid caps, and then it gets devoid from large cap names. So that's what the markets were going through in the last couple of months, which is why if you look at it in terms of the relative comparison, relative correction as well, the mid caps and small caps this month have corrected far more as compared to the Nifty and Bank Nifty. Nifty, in fact, is still up some 4.5% so far this month as compared to a negative performance from mid caps and small caps. So that should enumerate the point which I'm trying to make. Now, typically a correction of 20 to 25% at least should be considered as a modest first level correction for the indices. So assuming if the mid caps and small caps say go for another 1 or 2 months of correction and say in the similar tune of another 5 to 7% odd as an average, then I would consider that the correction is more healthy, and that could be a good entry point for someone who's missed out earlier and is looking to try and chip into large cap or quality mid cap and small cap names. So I would suggest that wait for at least a couple of months of further corrections into small caps and mid caps, and don't be in a hurry.
Okay, this one is coming in from, I've kind of missed the query in this loop, but let me take this one that's come on Zomato. We have one of our viewer actually ask, rather this is Rajan, who wanted to know whether it's a good time to accumulate Zomato for the longer term. He's already holding about 100 shares. Ashish, today we are seeing a sharp downtick in Zomato. If somebody is looking to invest at current price, does it make sense for the longer term to enter into Zomato now?
Well, actually, let me say this, that is a very difficult question to answer because it's a new stock, new concept, very difficult to understand how it will grow. To begin with, valuations at the time of the IPO itself were expensive. So to give you an idea, even after today's fall, it is still at a very, very significant premium to what it came at as the IPO price. So yes, it is very expensive, but when you are buying it in it's a leap of faith. You are hoping and believing that the market here for food delivery will continue to grow, and the startup of culture will continue, and this kind of company will eventually make money and lots of money. It's a leap of faith. So at best, I can answer like that if you're a risk averse investor, you don't like to see anything really going bad in your portfolio, then stay away from Zomato, because really speaking, it is really there's no way we can predict what will happen 4-5 years down the line. It could really be something very good or even something very nasty. So for risk averse investors, it's an avoid. If you'd like to take some risk for a high return in your portfolio and you'd like to play with the flavor of the season, then certainly use these downsides to buy. But when you buy it, you make sure that it is a very small part of your portfolio. Like I said, I think it is really more than priced to perfection, because even the IPO was expensive, and this is almost 70-80% premium to the IPO price. So I think use declines to buy in a very slow way and buy only a very small part of your portfolio into this. With the kind of that part of the portfolio where you can take a risk and hope that in the long run, what the kind of faith market has in this company will play out.
Very well answered, Ashish. Achal's got a question on the short end of the spectrum, though. Kunal, coming to you on this one. Asian Paints, Achal says, wants a 3 to 6 month view. Should I take delivery is the question. Also, can I look to buy call options as well?
Just that look to buy it in delivery mode rather than looking at it from the options. Options are typically instruments which if you're buying it, it requires markets to be very, very stable. A volatile market may eat up a lot of premium, especially if you're buying deep out of the money options and the further options further into the expiries. So I think in that sense it's much better to try and chip into deliveries for Asian Paints. And as it is, I think it's a stock which could probably benefit with the fall in crude oil prices, like what we've seen the last couple of weeks, the kind of correction the crude oil prices is going through. So if that happens, then I believe Asian Paints could be a stock which could come back into a trending mode. So it's a good delivery based buy.
Right. Quickly on this one, Kunal, Aurobindo Pharma Kirti is already bought it at levels of 967 rupees per share. Wants to know whether she should hold it or average, considering the sharp downtick that we've seen in Auro Pharma. What should Kirti do?
There's that wait for averaging. Don't need to rush in just because the prices have corrected by more than 25-30% in the last few weeks. Typically, when you see bottom formations, you wait for a strong bullish price candlestick, and that has to be supplemented with very strong volume patterns. If you happen to see that happen for Aurobindo Pharma, say over the due course of the next couple of weeks, that could be an indication that a bottom has been formed. Not at the current levels, because there is no signal as such that the prices have bottomed or showing a short-term bottom formation over here.
All right, now since we have so many questions and it's impossible to answer all of them, this next part is an attempt to take as many as possible so that you at least have a sense of what you should or should not do. Ashish, you won't be too familiar with this. This is the rapid fire segment, and like the name suggests, we would request you to keep your answer extremely brief. So ideally just give us a view as to whether you would say you should buy, sell, avoid completely. All right, so the first question is for you on the fundamentals. Dikshita is asking about Universal Cables. Is it a good stock to buy for the long term?
Yes. It is a good stock to buy.
Okay, this one is coming in from Shobit Singh. He's saying Sudarshan Chemicals, he's already bought 100 shares, 510 levels. Does it make sense to hold or sell? Kunal, what's your view on Sudarshan Chemical? Makes sense to hold?
I would suggest a hold, and as well as an averaging at current levels.
Ashish, Borosil Renewables already bought by Rahul at levels of 293. Can it be added more at this juncture?
Yes, certainly it can be added more. The company looked very promising. It is almost a monopolistic situation in a very fast-growing industry, and so it looks very good. Yes, certainly you can buy more.
This one is from Pratham Reddy, JSPL, 130 shares which is purchased at 393 rupees per share. Wants to know whether he should continue to hold or sell it. Any target that you can give quickly, Kunal, on this one?
I would suggest that keep a stop loss on this trade, and stop loss would be around 355 mark for JSPL, because if the stock breaks that level, then it would be in for more correction from those levels.
Ashish Tilden is asking why Motherson Sumi is under so much pressure. I guess it's on account of OEMs and how production is looking, but would you buy for the long term?
Again, for a risk averse, avoid, because the company has a very complicated structure and has presence in many geographies. Difficult to really assess. Looks very promising, but it's a high risk, high return kind of a scenario here. So if you're risk averse, avoid. But if you like to take some chance for a high return in future, then it's a good stock to add on the fund.
And the timer is out. We're done with the query segment. Thank you, Kunal, as well as Ashish, for joining us on the show and taking us, our viewers through the right stock selection, what they should do with their portfolio, as well as talking about Cadila Health in depth. On that note, thank you, Kunal, as well as Ashish, and we will slip into a break in this edition of Buy Now, Sell Now, but lots more lined up for you after the break, so don't go anywhere.